Hi, everyone.
Hello, everyone. Welcome, welcome.
Hello.
Okay.
Hi, good morning. Good morning.
Good morning,
Hello.
good afternoon, good
Or good day, I
evening.
should say. Yes.
Yes, wherever you may be. We're going to get started in just about a minute or so. We're just waiting for a couple more people to join. Have a couple of more participants that are joining one after the other. Okay, perfect. I think we can get started. If you guys don't mind turning on your cameras just for the beginning of the webinar while we do short introductions. First of all, welcome everyone to the third and last webinar in the Eco-Micro Scale for Resilience webinar series. Today we have our partners GAVA Capital, Marta Juste and Thomas Ribe that are going to be presenting, and we have an external guest speaker from Finance in Motion, and they will be providing the webinar presentation on the investor's perspective. So that's just a short introduction. If you guys don't mind putting on your cameras so I can take a quick screenshot for our socials, which is always nice to have. And big smiles, everyone. 1, 2, 3. Perfect. Okay, and with that, I'm going to hand it off to you, Marta. You go ahead.
Okay, great. Then, hi, everyone. Thank you for being here today at the third webinar of this series. Today, we are going to talk about investors' perspective from adaptation finance. I'm going to share my screen, in fact. I guess you can see my screen now, right?
Yep.
Okay, so first of all, this is going to be an interactive webinar. So it would be great if you have any questions, anything you want to comment throughout the webinar, please let us know and we can discuss about it because it's great to have your views and also to share different thoughts. So today we are going to have the following objectives. So we are going to talk about the topics about the importance of resilience finance, mainly from the investor's view, some upcoming finance opportunities that might be really interesting for your institutions, main requirements that investors have for institutions to receive this resilience finance, steps that we see that are important for institutions to become greener, then the benefits of becoming greener for the institutions, and then how can institutions have or build these internal capacities with technical assistance. So this would be a quite interesting view from Lucia. So the participants or the two panelists are going to be Thomas Ribe, which is Director of Investments at GAVA Capital, and Lucia Gaitan, which is manager at the Green Finance Center in Finance in Motion, both of them with a vast experience in agriculture and resilience finance. So first of all, Thomas, if you want to start, the floor is yours.
Perfect. Thank you so much, Marta and Benedict, for the introduction and for this webinar. So to start with, for whom is it important, resilience finance? It's important for smallholder farmers. Rising temperatures, increasing droughts and floods is destroying crops, and it's making more difficult for smallholder farmers to continue feeding their communities. So by funding adaptation methods such as irrigation, organic fertilizers, and greenhouses, smallholder farmers will be able to become more resilient and adapt to climate change. But there are barriers to smallholder farmers. One of the barriers is adoption. For example, there can be an incredible resilient seed for smallholder farmers, but that seed might actually not produce sufficient amount of yield that the farmer would be expecting. Another of the barriers that they have is that they are very atomized within their countries. One of the solutions for smallholders being atomized is the second actor for resilience farmers, which is financial institutions. Resilience finance is important for financial institutions because they are seeing an increased vulnerability of farmers and vulnerable communities within their countries. and they're seeing an increase in arrears in their portfolios. And one of the consequences of this increase in arrears is the exclusion of this sector from their financing. So with technification of financial institutions in climate finance, MFIs can actually increase the exposure to this segment by providing a proper offer to these clients. Some of these products can include drip irrigation systems, biodigesters, cold room storage, enabling them to be more productive and improve the quality of the borrowers' lives. The third actor, which is also important and for which is important resilience finance, is investors. And it's not only funds such as Gower Capital, it's the investors that are actually investing in funds such as us. More and more, there is an increased concern within all involved stakeholders, that be regulators and investors, society in general, to increase climate adaptation and mitigation within investment goals. Our mission at Gower Capital is to transform the lives of vulnerable communities through investments to alleviate poverty, but also to provide a financial return to our investors. In general, the targeted stakeholders that we're reaching are, as I mentioned before, smallholder farmers. They're representing a significant portion of the world's population, underserved and unattended SMEs, as well as micro-entrepreneurs, which are often overlooked, but also vital for the economies in general. And of course, the last but not least stakeholder is our environment. In Gower Capital, we have been developing our investment strategies since we started more than 10 years ago. So we initiated our investment strategies focusing on financial inclusion, promoting economic growth by providing access to financial services to the most underserved communities. But that was then already transformed into integration in value chains, primarily for smallholder farmers. And we have now included climate change adaptation and mitigation to protect those vulnerable communities. So we've launched so far 3 different funds, and we're in the process of launching a new fund. We've done almost 50 investments in 34 institutions along 19 different countries, and we've supported 500,000 families worldwide. So as I mentioned before, we've launched 3 different funds. The first 2 funds were launched back in 2010, 2014, and they were focusing more on financial inclusion and microfinance in general. But then back in 2019, we realized that there was a need for additional further financing for smallholder farmers. They were underserved and they are still underserved. And that's why we created and we launched Uruma Fund. Uruma Fund is a 120 million euro fund focusing on support of smallholder farmers through financial institutions and agtech companies. Since the beginning of the launch of the fund, we've already done 18 investments within Latin America, Caribbean, Asia, and Sub-Saharan Africa. But we're now focusing on the intersection of financial inclusion, agriculture, and green financing. And this is the goal of our next fund. It's called Quali Fund, and we're expecting to launch this fund by September, October this year. It's expecting to be a 300 million euro fund focusing on climate adaptation and mitigation through investments in financial institutions, as well as climate solution providers. So what we're trying is to build an ecosystem for farmers and small businesses to access climate solutions. Quali Fund mobilizes both public and private capital. On the public side, we have first loss tranches from the European Commission and the Green Climate Fund, but we're also mobilizing private capital. With the 300 million that we're expecting to reach within the fund, we are conducting both debt and equity investments. And these investments will be done through financial institutions and climate solution providers. So why is it interesting for financial institutions? It's interesting because they will be able to serve clients, to serve them with climate solutions to most vulnerable communities. And why is it interesting for climate solution providers? Because we will be able to link them with financial institutions and therefore benefiting also both climate solution providers and financial institutions. In total, we're expecting to conduct around 25 investments within this fund. We're expecting to support over 500,000 smallholder farmers and SMEs, and we are expecting to be able to reduce 6 million on CO2 equivalent emissions.
Yes, sorry, Thomas. I think there's a question from Michael.
Perfect.
You can go on and ask.
Yeah, hi. Good morning. I think I want to type it. Asking, I'm happy to hear about the SME lending in particular and the financing institutions. What about access to financing for green construction, particularly residential and commercial buildings?
So what we're doing, we're still, there's a technology list for QualiFund. There will be a focus in insulation for residential buildings, not currently for the construction of those type of buildings, but insulation would definitely be part of the financing of this program. I think there's another question from
another question. Yes, Cletus, you can go ahead. Joseph.
Well, maybe
we cannot hear.
Yeah. Otherwise, I can continue and then you can ask the question. So and maybe this solves also part of your question. So what are we looking for, and what are in general impact funds and investors looking for looking at resilience finance? So first, regarding country risk, we're looking at, of course, political risk, and here we want to see if there are any restrictions on capital inflows. We would be looking also at interest rate caps, of course, and it's a very commented topic. Sometimes when you do have interest rate caps, you're actually having a perverse effect, as some of the financial institutions would not be providing financing to the most vulnerable sectors because they would be riskier clients and they would not be able to do it at higher interest rates. We would be looking, of course, at macro risk, at financial stability in the different countries, GDP growth, inflation projections, as well as regulatory frameworks within the countries. Within the regulatory area, we are generally very much focused on countries where there are already microfinance networks developed, and also those in which there are green taxonomies that are already being developed, which is the case in some of the LATAM countries. And the last but not least, climate risk, and specifically availability of climate solutions for smallholder farmers, of climate insurance for smallholder farmers. We would then look in depth at the entity risk. So we would focus on governance, and the specific commitment that top management of the institution has for an environmental strategy. The financial strength, of course, of the institution. So we are looking at those with a history of profitability, with good portfolio quality, acceptable capitalization levels. But of course, we would be also looking at both the social and environmental aspects. We're also focusing more and more on institutions that are digitalizing their full credit process and also including algorithms to develop a credit scoring for their underwriting and credit analysis. And of course, those institutions that are serving farmers, understanding their agricultural readiness and specific risk management systems that they have developed. So what would be the different steps for institutions to become greener? The first step is to have a green strategy and implement it. So have a definition of the green strategy with detailed goals, a mission, compliance with applicable laws, but also implementing this strategy, have a buy-in from management, a proper governance and process, and monitoring the environmental impacts. The second step would be entities, financial service providers that identify environmental risks and opportunities. And this can be indirect risks, so those related to their clients and vulnerability of their clients and negative environmental impacts of their clients, but also direct risks. So those related to the institution itself, building and staff, and negative environmental impacts of those items. The third step would be to actually manage those environmental risks and opportunities. So including the vulnerability of their clients in the risk and financial risk and credit risk assessment, developing specific tools, for example. And also within their own institution, taking actions and having different processes to reduce the institution's vulnerability to negative environmental impacts. And then the fourth step is becoming super green. And those are institutions that are already offering financial and non-financial products and services. So clean energy solutions, energy efficiency, sustainability, sustainable agriculture products, as well as non-financial products such as awareness raising webinars, specific training, or technical assistance. And in this sense, it would be interesting to understand from those connected, where is your institution currently at? Which of the different steps? I hope to hear more of the 4 types of institutions, but it would be interesting to hear where you are and what is the expectation for your institution to be at in the coming years.
Yeah, so please go ahead and tell us what you have developed until now. Yeah.
I have a question. I have my hand up. Any idea what the financing would be coming at to an organization? So we are Belize's development finance institution. So this sounds interesting, but any indicative kind of what the interest rate to us would be for us to run them?
So it depends. First, it depends on country and currency. We are a euro-based fund, so our returns are in euros, but we do provide financing in local currency and we hedge our position. So it really
we are fixed to the US dollar at 2 to 1. So if it's in US dollars, then it's fixed.
So we would in principle, and then it really depends on where the LIBOR and Euribor are in the coming years. But we would be expecting at least a 4 to 5% return to our investors. So yeah, we would be expecting at least
you're looking at LIBOR plus 4 to 5.
No. On a fixed basis, it would be around 5% minimum 5%. Return for us.
All right.
And a question to you. So, is your institution currently at?
Well, I will try to answer some, and I'll ask my colleague who deals with the environmental and management, social side of it to come in. We're doing a bit of all of this, all right, because we're moving towards GCF accreditation. We're in that process, so we have an environmental social management system in place, and so we're doing that. For many years for the past 5 years, we've been pushing renewable energy and energy efficiency product. So we have our green policy and things of that nature. We're actually in the process right now. We are in our 4th iteration fourth sprint of the first iteration of changing out our whole core management system to go to one that allows us to do some of what you're seeing here. The thing that we don't have is climate insurance. And we don't have that because that's not available in this part of the world, right? So in Belize, we are ranked about 8 in terms of vulnerability to physical risk, like the rest of the Caribbean. We are in Central America, as you know, but there's no climate insurance. You know, my career started many years ago with looking at agriculture and stuff like that. And from then there have been talk of agriculture insurance and then climate insurance, but it has never materialized. And it's kind of a catch-22 now, because as the risk models are saying, well, you're in a more vulnerable area to physical risk, and the risk becomes higher, then the insurance becomes further. So, you know, that is a difficult one. But having said that, I mean, the agriculture sector in Belize is growing. The farmers are resilient people, and they know how to rebound. Typically, when we do stuff, we have a sovereign guarantee on the bottom end of it. So that's what we come to terms with. I don't know, Veronica, if you want to maybe touch some of what you're seeing here from your end.
And maybe before Veronica speaks, that's actually climate insurance, and climate insurance for smallholder farmers is one of the key areas where we would like to support. We've seen that there are some there is some climate insurance starting in some of the LATAM countries supporting smallholder farmers, but it's true that in the majority of the Caribbean and LATAM, climate insurance is still a huge issue.
In the smaller countries where you need it the most, it's not there. So if there's a way to maybe use this to be able to provide something, that would be really big.
I think alliances with insurers would be key. And if there's a way that with our technical assistance, we can foster those alliances with insurers, that would be great.
There's a thing called the 5 Cs in the Caribbean, the climate, I don't remember everything, but the Climate Change Center for the Caribbean. And this is an area they're working towards. So they're trying to find a way to bring climate insurance to the Caribbean. So I know it's something they're working on. I haven't gotten an update in the last few months or so, but that might be an opportunity to tie in there. I think Veronica is ready to come in.
Yes. So essentially, CEO, you had mentioned a lot of the things that we do, and in the presentation, I can see we're already doing a lot of what was mentioned. For example, we have our EEE loans. We look at hybrid vehicles, solar water heating, air conditioning, irrigation for drainage, alternative fuels like biogas, biodigesters, and quite a few. As the CEO mentioned, we are or have applied for GCF accreditation. We have implemented an environmental and social management system. And I think the step where we want to reach is to be able to look at the carbon footprints of the project that we are funding, and so that would be the back end of some of the objectives where we want to reach. So essentially, I think we have a lot of the different components, and I do agree that the climate finance is a very big issue for us. You know, we and also for that question in terms of the residential component, we also look at that as well, you know, ensuring that a lot of adaptation measures are built into the construction of houses and buildings and so forth. So I think generally we have a lot of the various components that were mentioned here, but that climate insurance is, I think, is absolutely lacking for us. We haven't even really made any progress with that.
And it's great
if I could add one more
commitment to resilient financing.
If I could add one more thing, Thomas, we are getting support from the IDB. So we do a lot of monitoring and evaluation, but it's all paper-based at this point. So because we're putting in a new core management system, we have the ability now to automate. So we have a consultancy ongoing. We're about halfway for monitoring and evaluation and accountability learning system. So we want to be able to get all right down to the KPIs that we need to track. And so we're building those things in. The system we're putting in is quantum computing, it's no code, which gives us a lot of freedom and ability to be creative. And every piece of data we capture in that system, we can use to report. It comes, AI, machine learning, and the whole gamut. So essentially what we're doing, we're turning the organization into a technology organization to be able to provide the kind of financing to support farming. The productive sector for us is about 62% of our portfolio right now, and about 60% of that is actually agriculture in some shape or form, right? We recently did an equity investment, so we have some experience. It's new doing that. And we are also a part of a World Bank initiative where we are lending and they are providing grants for climate smart agriculture. So we are lending our own monies and they are putting the grants beside it, but we have to be the ones to execute the grants and work with small farmers to do so. And that's in several different agriculture sectors.
Excellent. Thank you so much.
Yes. Any other contributions? Maybe Michael? I think there's another hands up as well.
There's
I know Cletus had a question. Maybe he could speak first before I go ahead. Cletus?
Yeah, Cletus had a question in the chat.
I'm not sure if you can hear me.
Hey, we can hear you.
Oh, all right, thanks. I know Teams is always a headache for me. Yeah, I did post my question in the chat, but I was trying to figure out the area of operation for, I think it's Gawa Capital that you're speaking about. I noticed you mentioned somewhere in the slide, I picked up Latin America and India, but I didn't see anything specifically referring to the Caribbean, which is where we are located. And while we may be small in terms of population and that sort of thing, but we are seriously impacted by climate change events. I mean, a couple of weeks ago, we saw what happened to our neighboring islands of very small islands, Carriacou, Petit Martinique, in the Grenada, St. Vincent Grenadines area, kind of total devastation. We had our share in 2017 from Hurricane Maria in Dominica, where we were kind of decimated. My organization, NDFD, we have started with the assistance of the IDB through the Eco Micro program to implement a green financing project. We are a micro institution and we have to sort of get financing otherwise and to be competitive and provide competitive rates to our clients. So this is one of the areas. The other area, whether you consider the Caribbean in what you do, and also how do we make financing competitive to the end user in terms of how do they access it is another issue by itself, because a lot of those persons are challenged when it comes to certain collateral requirements. So that is one thing. The issue of being inclusive of women and indigenous populations are other issues that have to be considered. You also have the issue somebody mentioned, the insurances that are critical, particularly to have small businesses, micro organizations to restart after those catastrophic events of the major hurricanes. Even droughts, and so where do they get the cash, the capital, the financing to start back their operations, and at the same time to be able to live as close to a normal life as possible, to have access to food, water after those periods, and then to restart something that finances their livelihood. So these are critical questions that we have to answer and be able to think it. And does this financing window that is being projected, Kuwali Fund, kind of consider those things, and are you ready to be able to work at the grassroots level with organizations like mine and others within the Caribbean to develop real sustainable businesses and maintain those practices to ensure that we do not, how do we call it, maybe greenwash, but rather have real impact on our clients, our end users, those that we serve. Yeah, thank you.
Thank you so much for your intervention. Just to clarify, of course, we are supporting the Caribbean. So the fund, the 300 million fund, is expecting to be diversified between Latin America and the Caribbean, with 70% of the funds towards that region and 30% to India. Just in terms of institutions, financial institutions, actually 70% of the funds are expecting to go to financial institutions, primarily microfinance institutions. We are looking at institutions with at least, in general, at least 30 million euros equivalent in total assets. So that would be one of the requirements that we would be looking for. And just to add, we will have a technical assistance facility, around 12 million euros equivalent of technical assistance to support institutions in green financing.
Great. I don't know if you have any more questions, or we can continue maybe and have the rest. Oh, yeah, sorry.
Can I just follow up very quickly with this, because this is Michael again. So I was about to say the challenge we have, for example, in Trinidad and Tobago, we have a lot of distortions in our system because our electricity is here heavily subsidized. So therefore, it is difficult to compete by creating energy efficient products, for example, because electricity is just too cheap. So people it doesn't make a difference in most cases. Or sometimes it actually be more expensive to have the green product. So how do we? And one of the questions I spoke about was about policy. How can we help influence policy? And it may include providing getting support from for green financing. How can we influence policy so that we can move the consumer to be more inclined to support green products and services instead of just keeping the status quo? I don't know if I'm explaining myself properly because I'm a little tired, but if it is that we need to, what do we need to do to remove some of those obstacles? One of the things that came in the last discussion, the last meeting, was economic analysis. Because when you do an economic analysis of a decision, you normally take in consideration what contributions the public sector would have had in the financing and the operation. So, for example, if the government is giving tax incentive, for persons to come in and construct something, but they don't give any equivalent to the green product, to people going into the green product, then it doesn't really provide an advantage to go in that area. And having environmentally unfriendly products may actually cost the government more, but that's not taken into consideration when that decision is being made. So I'm just trying to figure out what can we do to help shape the conversation to make it much more friendly for green financing and green products and services.
Mm-hmm. We agree that the communication and relationship with the public institutions is key. We do believe part of the technical assistance that we will be able to provide might help. In some countries, we are piloting specific products that sometimes haven't worked. For example, in certain jurisdictions, because of those heavy subsidies, the development of solar panel products are not working. But doing these pilots and having that communication with public services is a first step, I think, for us to start with.
Mm-hmm. Maybe if it's okay, we can continue with the presentation and maybe have the rest of the questions at the end. If it's okay. Mm.
So, and I think a lot of you have already mentioned what we aim for with this super green fourth step. The first part that we're looking for is for institutions to offer an agroclimatic analysis, which some of you, as you mentioned, you're already doing. So providing a yield and cost analysis according to the different irrigation systems, the seeds, the type of fertilizers they're using, type of soils, and then developing a specific agricultural risk management system. And with the data from this system, be able to actually do a risk-adjusted pricing to their clients. We're also aiming at institutions that want to provide technical capacity, both to the loan officers on client vulnerability and for them to learn more, and technical assistance also to the end borrowers on the different practices, focusing on productivity and diversification. As we were also discussing just right now, the aim is also to foster alliances with insurers, for example, but also with different technology providers, so that farmers can be involved further in the different value chains. And of course, providing access to different products, products with, for example, better quality inputs or agricultural technologies and services related to irrigation, storage, and harvesting. In summary, what we're looking for is for solutions that directly support the stabilization of income for smallholder farmers, because those with more stable income are less vulnerable to climate change and have more resources to save money.
Okay, thank you very much, Tomás. Now we can go on with Lucia Gaitan from Finance in Motion. The floor is yours, Lucia.
Thank you. Well, thank you, Marta. Thank you, everyone at GABA Capital, also for the invitation. So I'm just going to share with you some of the experience that we've had with one of our funds. So just to go very quickly, Finance in Motion, it's an asset manager that advises and manages different funds globally. And I'm going to focus on the Eco-Business Fund, which is the one that it's really focused on climate resilience. So I try to follow the slides also with the questions, with the topics that we're going to cover today. So why it is importance of resilience for finance for investors. So basically, Eco-Business Fund was founded by KfW, so the German government, through their development banks, and Finance in Motion, and other investors that are Dutch government, UK government, also to their development banks, and even private investors as well as IDB Invest, for instance, or Allianz. So they're very, very concerned, and they're invested in the Eco-Business Funds because they want to respond to the effects of climate change. So the fund initiated in 2015. Basically providing finance and technical assistance to the financial sector and also to the real sector. And as you can see, our mission is to promote business and consumption practices that conserve biodiversity. That's the first one, sustainable use of natural resources, and of course, mitigate and adapt to climate change. So these three pillars are very well connected. And because of this mission, we only focused on these four sectors. So we only provide that finance and that technical assistance in the agriculture and agri-processing, fishery and aquaculture, forestry, and tourism. And we actually have two sub-funds, one focused on Sub-Saharan Africa and one focused on Latin America and the Caribbean. Last year, we actually entered finally the Caribbean, working in Dominican Republic. But right now, our focus, so we cover from Mexico to Brazil right now, and basically focus on this, no? So very important to say that why the fund and why it's important on resilience. So because we're an impact fund, so we basically focus not only on financial returns, but also on the impact, and that's what investors want to see. And therefore, if you see, every 6 months, we are reporting this to the investor, and is the hectares of farmland under sustainable agriculture, for instance, or what is the share of portfolio allocated to sustainable aquaculture on the hectares of farmland protected for deforestation. So these are the practices, and this is the financing that is going directly to these institutions in order for them to implement that with their clients, right? Just very general information that we are a fund that already we already are at 47 million. We invested in 12 countries, and we work with 37 partner institutions. And here again, our focus, our 98% is concentrated in financial institutions. So working with local national banks, private and public, mostly private, and technical assistance, which is very key, of course, in order to kind of enhance the impact of the investment. If we can go to the next slide. So just to talk a bit about the requirements as investors. So again, we have, of course, financing requirements and other requirements, but I just want to focus on the eligibility and impact potential. So basically, we have two eligibility criteria, and is that, for instance, a financial institution must have a portfolio, one in the sectors that the fund works, so agriculture, forestry, etc. And they must have one. It can be like those clients or those producers or those companies must be certified with a sustainability standard that it's kind of approved by the fund. And how we approve those standards is that they follow certain criteria. I will show you in the next slide. And the second one, because of course not all companies or producers are certified, is something that we call the green list. So we develop a list with around 82 measures that are considered green and that are considered that they basically faced climate change, depending on the sector and sometimes on the crop. So we will have a specific measure, for instance, for rice, that is soil labeling. So if a bank has a client that is implementing that, or they want to, they can have access to our funding now. So these are kind of the most important, and based on that is that we develop the indicators that I showed you before, and that we can really show that we are impacting these sectors and that we're supporting climate change. So if we can go just to the next slide, and I don't want to bore you with this one, but just very fast. So I just told you we have the sustainability standards, in which basically all of the standards that we have approved adopt practices that reduce the risk associated with climate change, like diversifying crops, improving soil health, implementing water efficient. Others actually required explicit climate risk management practices like rainforest fair trade, which is one of our most used standards. And on climate mitigation, the most important one is that all of the standards that we have approved avoid deforestation. So we cannot work with a standard that has any activity of deforestation and has different cutoff dates, of course, depending on the crop. And for the green lists, which are these activities that I was telling you that depend on the crop or depends on the sector, so activities that increase resilience, like sustainable land management and climate smart agriculture, like precision agriculture. We have measures on that. On efficient irrigation, using drip irrigation will, of course, reduce the use of water and also adapted seeds to climate change, etc. And on the mitigation, it's more like the activities that reduce emissions, like carbon sequestrations. We have also like specific measures on that. And the ones that you see below are kind of just the indicators that we report every 6 months to say that we are actually contributing to this, right? So just to show you a bit on that. And very, very quick, how do we work? So as I told you, we have our investors, so public-private investors, mainly from Europe, that they basically put the funding into the fund, which is the vehicle. And then we'll have these two ways to finance. So again, through financial institutions, but we also have direct investment through companies or producers, medium to large companies, actually, that work in these sectors. And very important technical assistance. This comes from donors. And what we can do is that we can have projects with both. So like with the financial institutions and what we call the end client. And we work with local and international consultants in order to do this. And something that is very, very relevant is that we co-develop those projects. It's not something that we impose according to the investment, but something that the institution would need in order to enhance the journey to sustainability and to green financing. So that's something very important. And kind of why we think it's what makes it special and how can we can support partners to finance climate resilience. We have that long-term approach. So we do debt, only debt to medium to long term, and we can do like top-ups. So we've had like partners that we started with 10 million, let's say, the first 3-4 years, and then we increase the line with another 10 million, so we can have long partnerships in which we can actually provide technical assistance during all of those years. We don't have a number of a specific number of technical assistance projects that we can do, but we can do that during the life of the loan. As I was telling you, the technical assistance projects are completely tailored for both the partner and the institution, and then borrowing, enabling them to prioritize what is that they want to act, maybe at the beginning and then during the relationship. We have specialized teams with specialized expertise on the sectors that we work. So we have agricultural experts, forestry experts, biodiversity experts. So that's something in-house, something very important. Also, local presence, of course. So their Latin American hub works from Bogota, but we have a small office also in El Salvador, and completely regional office with experience, of course, in the regions. And another topic that the webinar wanted to cover was what were the steps for partner institutions to become greener. And this is something that we definitely do through the investment, but mostly through the TA. And this is the way that we have experienced in the past 8 years on how financial institutions can become more resilient, more green, more sustainable. So there are steps. What we have seen is that the first one is what we call the environmental and social management system, because this is something that is kind of a requirement. Some of the institutions would have more or less, but what we have seen is that this is kind of the first step for them to understand the risk, right? They might not be already thinking, oh, should I have a climate change strategy, but how do I mitigate the risk of the clients that might come, right? And at the beginning, it's kind of a burden, but then they can see that it's also an opportunity. So this is kind of the first step that we see. Then we also support them in developing sustainability strategies in which actually the sustainability wants to be transversal to the whole operation of the institution. And here we also do alignments with SDGs, or Principle for Responsible Banking and Zero Banking Alliance, so that it actually works through the all institutions. As a third step, we see that they might be ready to actually develop a green financial product in which they can see if shrimp is an important product in certain country, and there's an opportunity of actually financing, for instance, infrastructure that is automatic and that can increase the input of shrimp production and reduce the cost. This is something that we can also do, and we have provided some support on that. And then as the fourth level, we have started working in developing climate change strategy, and actually integrated the climate change strategy within the environmental and social management systems. This is why we think that's the first step. So kind of mapping where my clients are, what are the main risk of climate, what can I do, what I should be financing this instead of this, or what practice should I be financing, right? And maybe the most complex level that we have seen right now is kind of aligning to the sustainable finance framework, like measuring the carbon footprint with the PCAF methodology, and actually not just scope 1 and 2, but going to scope 3 to become net zero, to align to taxonomies, gender, etc. No? So I think this is what we have experienced on TA. And we have projects, individual projects, but we have also the academy, which is kind of the capacity building that is we constantly provide to our clients when implementing each of these projects. No? So this is also very important that we have along that. And what we have experienced, what is the partner's perspective in engaging with us, both in kind of amplifying, for instance, the certified base clients that are certified, or they implement these green list practices that we call. There is a market differentiation to meet the demand for sustainable produced food. So yeah, we work a lot with exporters. So for instance, right now, the new deforestation regulation that comes in place. So we are supporting also our clients to meet those. And then we see that, for instance, if we have a certified client, they already comply with this deforestation regulation now. So that's something important. It also, we have also proved, and they have also seen that it improved the credit risk and the regulatory risk of sustainable clients. Something that I mentioned already is the long-term relationship and the opportunities for the green financial products. What I just mentioned, the regulatory compliance with the policies like the deforestation regulation. There's also a lot of reputational risk and stakeholder engagement, like from clients for investors, right? Investors only want to invest if X, Y, Z, or DFIs have environmental and social compliance in place. And of course, more and more can access to this target finance, like green bonds, DFIs, impact funds like us. And from the client perspective, what we call the end client, I'm not going to go through all of them, but the benefits, of course, of their borrowers, I think it's, of course, to become more resilient to climate change, basically to be able to continue producing that crop into the long term. So that would be the last goal, but of course, improve the efficiency, reduce the cost production. And this is what we're trying to also do through the technical assistant, is to measure, for instance, that productivity, measure what can be the practices that can reduce the cost, but also improve the productivity and the resilience, and all of the of the benefits that I just mentioned, that you can have access to the presentation then to go through each of them. So I just want to close with two very specific examples of projects that we did. So this is one with the financial institution. So what I was talking about, supporting them in implementing their climate risk strategy. So this is a bank in Ecuador, Banco Pichincha, and their ambition is to achieve the net zero emissions by 2050. And so a little bit is they need to have a strategy that is completely transversal to the institution. This is not just about the sustainability department, but it has to go on every department. So being an agent of change, the corporate governance also needs to change the climate risk and support the clients into that green transition. So first, the client needs to understand where there are those risks, and then what can they implement with the client, right? So if we can go to the next slide. So what we did was first to do the climate materiality assessment. So we selected which were the sectors that were more impacted by climate: agriculture, manufacturing, transport, construction. Then we did the identification of the physical and transition climate change risk. We set the target and the action plan on how they were going to reduce this risk so that business would not be so affected. And so, for instance, some example of physical risk: there's extreme weather events, drought, extreme precipitation, longer term shifts in climate patterns. That this also comes with higher operating cost and with higher insurance premiums and covenants, that as they were asking before, right? Some transition risk on clients not reducing their exposure to oil and coal at the pace that is required for that transition, for instance, the limitations to finance and adopt new low carbon technologies, and weak policies and incentives also to advance in this climate agenda, right? So what we did is that we set this target, this action plan to the client to achieve their goal. We measured the portfolio of the green emissions using the PCAF, and actually the bank was able to increase the funding from 5,000, that's the target by 2030 with all this plan setting, and define the climate stewardship and engagement strategy, and disclose the progress and the regularly update climate change scenarios to actually achieve this. No, so this was kind of a 1-year plan that we were able to support the financial institution. And very quick, a project that we did directly with the beneficiary, what we call the end client. And this is a project in Honduras. So these are clients of a financial institution that we provide financing, and they were having very high challenges, and they were not being able to produce potato during the whole year because in the dry season they basically didn't have access to water. So through the financing, we financed the development of water reservoirs, like very simple practices that you might think: water reservoirs and drip irrigation systems. And with these, they were able actually to increase the productivity and increase the income and the stability, and they were able to have the access to the market to deliver the products all year long. So in the next slide, we can see actually the numbers. So of course the investment went to the infrastructure, but the technical assistance gave all the capacity building on how to use and to maintain the water reservoirs and the drip irrigation system. So just for you to see the actual numbers that they were able to not only increase productivity but also decrease input like water consumption and increase the productivity. No, so these were the two examples that I wanted to briefly give to you on those two. So yes, happy to hear if you have any questions, and I can also share the presentation. And maybe I couldn't go very deep on the slides, but I hope it was something good for you to learn.
Thank you very much, Lucia. Very interesting presentation, and in fact the examples are quite interesting, right? The results that you can obtain from this kind of projects. So here are some questions for all of you, all the people that are involved in this type of institutions. There are two types of questions, right? One is the difficulties and the other one the support. So we want to hear from you what difficulties are you seeing at implementing this type of products, this type of strategies. Do you see it can be an interesting business model, or what would you need, right? And from the other perspective, on the support, you've seen these examples that Lucia mentioned, quite interesting. Do you see this type of support on your day-to-day? Have you received it? Or what other support have you received, or what would you need, right, from your side? So you can let us know, maybe Michael or Henry. Yes, I think there's Natasha. Yeah, go ahead.
Hi, are you hearing me?
Yes.
Okay, awesome. So I sort of wanted to comment before, but I guess this is a good place to comment. One of the challenges with adaptation financing is that it has to be significantly concessional. The cost of borrowing for the end beneficiary has to be at a level that they can adequately profit. So as a DFI, coming from Grenada Development Bank here, it's important that the financing be available, but it also has to be on terms that makes it attractive to the end beneficiary. And that continues to be one of the challenges that we see. The gap between the availability of financing for adaptation and what's needed within the market is significant. And we're not just here talking agriculture and some of those sectors. I think Michael mentioned earlier on, we've been significantly impacted by Hurricane Beryl a couple of weeks ago. And the need is significant. And you're not just talking about the need for rebuilding in a climate resilient manner, but even having some form of risk transfer for some of these sectors. It's been mentioned before, agriculture is primarily exposed. We've lost almost entire industries within a few hours. You know, we're talking fisheries, we're talking agriculture, and the areas that are hardest hit are the ones that are significantly exposed. You know, so when we're talking adaptation products and profitability, we have to look at concessionality. We have to look at risk transfer. I mean, we've been pleased in a way to get support recently after this last event. Government received a check last week for $44 million US from the Caribbean Catastrophic Risk Insurance Framework, CCRIF as it's called, which is an insurance provide a mechanism within the Eastern Caribbean, within the Caribbean region. But that's still a drop in the bucket in terms of what's needed. So the financing gap is significant, and the need for concessionality is a challenge. Collateral is always an issue when you come up to and you speak about smallholder farmers. So it's an interesting model. I like the fact that you marry technical assistance with financing because the capacity building is crucial to get persons to understand and to be better able to manage the resources that they're given. But there's a great need for even more to benefit the persons that we're looking to target. We have green finance products available. Again, the challenge is the cost of financing. So there has to be a way to get these costs down. And even when you're talking the 50-50 gap that the GCF and so are trying to meet, it's the attractiveness of the proposition for adaptation financing is not there. However, instances like Hurricane Beryl shows the need for it to be in greater measure. Yeah, I'll stop here for now.
Yes. Also, Lucia, Tomás, if you want to contribute to what Natasha mentioned. Yes. Any other contributions? Henry, I think you also wanted to.
Well, first of all, Natasha, hearts go to you guys to understand what it is when you get one of those. It set you back like a decade. You try to build back and you don't know when the other one is coming.
Actually,
Resilient
they said
people,
20 years.
20
not
years.
even a decade. Two decades.
That's a score. In terms of DFC, we're very interested in both presentations that we saw. The big aspect of making adaptation products is just technical support that can go along with it. Right. So see, in terms of the presentation you made, that resonates because when you look at what's on the ground, having had experience working with small farmers over 10 years, they are now getting to the point where they're understanding because, you know, you used to plant at a certain time, but then the rains are not doing what they used to do. The dry doesn't happen when it should happen. So they might not understand the science of it, but they understand something is changing and they're prepared. And the government, I believe, has done a lot of work to spread the word through the economic development, agriculture, sustainable development, and the DFC has done a bit, but you know, we need to improve where we are in terms of that. This is where we want to go, or part of what we want to do as a business development finance institution. So with the new strategic plan that we're finalizing, it's basically going towards Paris alignment, doing our part to ensure the government achieve the NDCs, and you know, working towards 2050. So the goals there and tying into the sustainable development so that all of this fits in. Natasha mentioned that the magic word, right, is pricing, because what we see is a lot of times these funds are coming in and it's just price out of the market, and the farmers have to be competitive. So we have to look at that. The least, we're tiny, but we have liquidity in the banking system. The banks are not lending, I guess, probably as much as they should. And so interest rates locally here on the average are about 8.3%. So if we're getting loans at 7%, or you're looking at SOFR plus, which is the case right now, we call the SOFR rate the sufferation rate because, you know, facilities that we got at 1.2% are now priced to us at 6.7%. So margins are very thin. You know, when we try to talk to some of the multilaterals and say, you know what, we need to do this, but we have to be sustainable as well. We can't be doing all of this to save the world, and then the DFC is not around to see what's going on. And you add in all of the reporting requirements in it. But basically, we are looking to increase our return on time invested, and by doing that, you know, we're more efficient, and we have been able not to pass on interest rates to our clients. We basically, tighten the belt. But we are very interested in this, and we look forward to following up both with C and Thomas, just to see what is there. We don't have everything perfectly as you want it, but everything you have there, we're doing at some level, in a perfect way. So there's always room to improve the organization, obviously. And so it would be beneficial both to the DFC as an organization, and obviously it would be beneficial to potential beneficiaries of financing. So I think there's an opportunity for discussions. So we enjoy what we saw. And the reason I didn't answer just now because we were on the phone talking before I said what I said.
No,
Yes, and
maybe just to respond, sorry, just very quick, because we always get that like interest rates, we need to be competitive. We won't be competitive in the sense we won't give better rates, and our value proposition will be always technical assistance, which we see that as a add value again, as we were saying, that we provide technical assistance kind of non-stop, not limit, and because by having that technical assistance, when producers can also realize that they are increasing productivity, reducing input, we feel that the competitiveness that we can bring into the medium long term. So it might not be interest rates, but this is the way that we see it, and as from our side, that's the added value that we bring, is that you have a long-term partner, not just for investment, but for TA, during the whole life of the loan, that at the end can be 7-8 years, right? So that's something that's also important.
Yeah, that's understood, and that's why I mentioned a bit of training. Now, we have seen people approach us, or entities, with interest rates north of 12%. With all the technical assistance in the world, we can't do that. Certainly, your point is, Veronica, you wanted to?
Yes, I wanted to touch on the second portion of the slide, which speaks to have you received any support to promote the green strategy and financing. And I just wanted to share that a few years ago, maybe 2021, 2022, we received assistance from the IDB to really develop our green strategy and financing, and to really define what the DFC classifies as a green loan. And as a result of that, several products were developed, for example, for the sugarcane, for cattle, livestock production, and for citrus production. And so those big three products were developed, and it allowed the DFC to be able to lend to these and the different loans. For example, it allowed for different adaptive practices to be incorporated into the different loans for these farmers. However, when I compare that to that presentation just now, I think the jicama was what you had in the field. What I don't see and what needs to improve is to get technical assistance and do like maybe case studies to show, and I guess this has to be linked with our Ministry of Agriculture, but I think that is where the link is missing, to say, look, here is a case study of where you implemented the adaptive practices or mitigation practices, and this is the result. Because I think what you want is more like demonstration plots, for example, to really show the difference and to help to drive these different products. And I think that is what is missing in my view. But yes, we did receive very good support, and we were able to develop very large products in the agriculture sector. And we're actually now collecting that data and taking or migrating that data into our new core management system.
We're also looking at blue as well. So there's a lot of talk here in green, but Belize being what it is, it's also opportunity.
Great. Thank you, Veronica, for your contribution. Any more thoughts on these challenges, on this support? I don't know, Lucia, Thomas, if you want to contribute to anything else as well.
I mean, I think for us, we see those challenges and No, I mean, what we keep continue trying to work is again on this partnership on really creating an added value and not just giving money, and really share experiences, reaching not only the financial institution but the end client. I think that's also very important, and that's what we try to do more and more. Not only capacity building, but these more complex projects we cannot do with all of them. But I think that these are pilot projects or in case studies, and we can really show that if both things don't go together, it will work. So it's not only about the money, but it's also about how to use that money in order for become more resilient to climate change. I showed this the case study on agriculture, but we're also quite active on the blue, more on aquaculture. We've worked a lot on shrimp production, and it's something that we believe that aquaculture it's something very, very, very important.
You see, we did our first equity investment about 2 weeks ago, a month ago, and it's in an aquaculture shrimp production, and it's a certified farm, and it has the RAS system where all the water goes back, and we're looking for additional equity investment to bring back that farm. So,
okay, we don't do equity though, but interesting to hear.
Actually,
we need some debt.
May I just say something
so
quickly? I'm trying to respond to some of the question and answers. And for it to be a profitable line of business, we need to do two things. One is we need to provide, we need to deal with the demand side. In other words, to make sure that something can be profitable, we have to make sure there's a demand for it. So it's how do we develop strategies and policies to enable or to encourage persons and the consumer side to purchase those products and services. Right now, it's an uneven playing field because the products that are already out in the market are not green and are being successful because consumers are accustomed to those products, and they are more likely to revert to those products whenever they're going to purchase. So it's how do we change the mindset of the consumers so that they can acknowledge that the green products and services are as attractive as the existing products that they have. That's one. Two, the issue that was being raised by Veronica and Belize, can't remember right now. Belize. Anyway, the issue they're raising is in terms of how the supply side is financed. And yes, we understand that the fund has to get a reasonable return for the investors. We understand that, but there probably needs to be a mix of financing that will include low cost financing and possibly grants alongside this kind of financing, supported by the technical assistance that would help achieve the objectives of all the parties concerned. So to support the FIs in the region, the challenge that we already have in terms of creating the demand is we have to make sure that our financing is pounding outside. Financing available for the FIs to be able to on-lend to entrepreneurs must be attractive. And so it's important that we try to find some way of those funding agencies working together to provide the financing to the regional FIs. In terms of the and being profitable, and the answer is it can be profitable. But one of the issues that we have to determine is how can we ensure that the economic cost, which is not considered in the financial decision, how is the economic cost included in that decision? Because if it is not included, then it gives us a wrong perception of what the cost is. So if we are buying non-environmentally friendly products, and then the government has to pay to clean up the environment, the cost being included by the government has to be included in the final cost. And that's not being done right now. So it's how do we make sure that that continues to happen so that the real cost and therefore the real price is actually presented when we're making the decision. And in terms of the support, yes, we receive support. Obviously, the IDB is doing a lot right now. There were a couple other projects in the pipeline, And so we are getting support, and we received the support from EcoMicro, but we do need the continued support, particularly with the technical assistance, and as I said, the financing, as I said earlier. So those are my suggestions, answers to those questions.
Great. Very interesting points of view. And in fact, they are good reflections of what could be done, what should be maybe next steps, or what could other actors as well, like public actors, do or in these scenarios. So very interesting, Michael, and we should all maybe reflect on that. So thank you. I don't know if you have any last few words, Tomás. Maybe we should be ending the webinar. In any case, please feel free to contact us if you have any questions, or maybe you want to contact or get to know more about Gawa Capital or Finance in Motion. We can also try to get that collaboration.
I think we have
Yes.
one last question from
Yeah.
Cletus.
Yes.
Yeah,
Go ahead.
just what are the next steps from here is my question.
Yeah, I was about to finish with that actually. So good timing on your question. Firstly, yeah, I'd like to just thank our partners at Gawa Capital, Marta and Jose for their presentation, the moderation, and also our speaker Lucia from Finance in Motion. Really appreciated your presentations, and I hope that you all got a little bit of a better perspective about what the requirements are to obtain this kind of financing, what the opportunities are. And I personally really, really very much enjoyed the fruitful discussions that we had, and the perspectives from all of your financial institutions, wherever you are in terms of the timeline of implementing these kinds of projects or products or monitoring systems. So thank you really, really very much from everyone. In terms of the next steps from now, I will be sending out a follow-up email with the PDF of this presentation. I'll also include Marta and Tomás's email and also Lucia's email. If ever you guys want to get in contact with them, the website to their page, just so you can get some more information. And on Monday, I will be setting a recording of the webinar, which I think would be interesting for some of you to look back on and consider the questions that were raised. The next steps from here is we won't be doing any active events for the next couple of months. However, we will be publishing coming September and October 2 white papers on the topic of digitizing resilience finance, especially in the Caribbean, what you can do to digitize your operations a little bit, and also especially one paper that's going to be published by our partners at CIAT, that's going to be focusing on the business case of nature-based solutions, more on the topic of the webinar that was presented last week. So those are 2 white papers that you can be looking forward to reading within the next couple of months. And we are also super excited to be sending out probably this week the official invitation to our half-day Caribbean Resilience Finance Day, which is going to be a half-day virtual event featuring speakers, international speakers from all over the world that are on leading climate initiatives, also part of leading asset managers and funds. So we're in the process of planning that right now, and we'll probably be sending out the save the dates at the end of this week and the official invitations within the next couple of weeks. That's going to be happening at some point in October. So yeah, keep your eyes peeled on your emails, because you will be receiving a save the date. And yeah, for the rest of the summer, around August, we know that it's probably a little bit more of the low season. We don't have so much planned, but as I said, or as we said, as always, we're open to communication. If you have any questions, if you want to talk a little bit about how implementing these kinds of solutions, monitoring system products could look in your institution, what are the best ways, practices to attract this kind of funding, we're always open. Just send us an email. We can hop on a call, talk about it. So yeah, with that, I think I'm going to close this session and also the webinar series. So once again, thank you very much, everyone, for your participation, your engagement. I really, really enjoyed getting to know you all better over the last couple of weeks. And yeah, I'll be in touch over email in the next couple of weeks and months.
Thanks very much, too. Great
Perfect.
work,
Thank
guys.
you.
Love the presentations
Thank
today
you.
and
Thank
all the
you.
questions.
Yeah. And
Yeah.
Thank
you'll
you
probably
very
get
much.
more emails from me again.
Perfect. I
Thank
look
you.
forward to it.
Okay. All right, bye-bye.
Bye. Thank you, everyone.
Thank you very
Bye,
much.
Have a
guys.
good day.
Bye. Thank you.
Bye-bye.
Bye.